Hey, Mortgage Coach community, Dave Savage, and today I am here to announce something new in addition to the Mortgage Coach platform. And to help me do that, I have Jacob Gibbs with me. Hey, Jacob, how you doing, buddy?
Hey, Dave, thanks for having me on the call today. Super excited about this new release. Let's tell them about it.
Yeah, let's do it. So if you recognize Jacob's voice, it's because a lot of the Mortgage Coach how-to videos in our YouTube channel were done by Jacob. He leads our support organization. So Jacob, we've got a new product enhancement. We're going to be telling everybody about the new tax changes. Before Jacob walks you through these tax changes, I want to frame it around the concept of being a mortgage coach and being an advisor to the families you serve. The gap between you and the average loan officer just got bigger. So we believe that a modern mortgage professional is someone that's a teacher, it's an educator of a family, help them understand different options. But let's face it, tax laws have gotten more complex. So whether you're a first-time home buyer that wants to understand, hey, the tax laws are different. What does that mean to me? Or you're moving up into a new home. How does that impact me? Oh, I'm looking at paying points versus not paying points. How do the new tax laws impact my decision? As a mortgage coach, the gap in your competitive advantage just got bigger. So Jacob, let's walk them through some of the changes, help them understand, one, what they are, and two, how they can use Mortgage Coach total cost analysis to separate themselves and have an even greater competitive advantage.
So thanks, Dave. So most of you have been using Tax Benefit for years within the Mortgage Coach software. You can still continue using it in the same fashion as you were before, or not using it if you don't want to. Just don't input a tax bracket. But what we're going to cover today here in our training is we're going to go over some of the new features that have recently been added. We are now observing the different cap structures. So it used to be you had $1 million cap on your loans. Now, depending on your filing status, it could be 750, it could be 375. So we're going to show you how to navigate within the system, and we'll show you what the output looks like. So let me share my screen with everybody for just a moment here.
All right, guys. So put your mobile phones away, zoom in, pay attention. You're going to get education here. If it's too much, you can always put the video on pause. You can play it back. You can listen to it again. I mean, Jacob's going to be sharing a lot of information, so this is important. If you want your advice to be a competitive advantage to families and with realtors, pay attention. Go for it, Jacob.
Great. Thank you, Dave. So hopefully you guys are aware of what this looks like. There is a row on the TCA and the rent versus own for tax benefit, and this will show up if you choose to enter a tax bracket within the editor. So let me show you how these numbers are being generated and what some of the new fields are today. Now, when you first come into your editor and you get past the goals section, you start going towards assumptions. On the total cost analysis, we didn't used to ask you for the standard deduction. We put a field in here to ask for it now, and the reason we did is because now your tax benefit will use the higher of either the standard deduction or the mortgage tax benefit for the year. If you don't want to use that part of the equation, simply don't enter a standard deduction here and we'll only show the mortgage benefit on your presentation. Now, as you go forward in here, you'll notice that field that I was talking about earlier. If you don't want to show tax bracket, simply don't put in a tax bracket here and there'll be no benefit showing on your presentation. However, if you do enter a tax bracket, you'll notice that there is a new drop-down area here asking you for the filing status of your borrower. And you can see there's only 4 different selections here. There's not too much, but the caps of deductible interest are based on this filing status. So make sure and choose the appropriate one for your borrower. As you continue going forward, when you get into your loan products, you're going to enter those the same way as you normally would. Now, the differences happen actually when you get to the third screens here. You'll notice that there is a new flag that asks you if the property tax should be deductible or not. This is based on a lot of user feedback from our beta pool. We found that people actually, if they could qualify for the home, their income tax deduction was actually pretty substantial, and it ended up negating property tax at some point. So what we do is we're leaving this up to you. Do you want to include the property tax deduction or not? This is a per loan field, so you can check it on one and not another if you wanted to do a comparison between the two. Otherwise, we still have the tax deductible checkbox for you there as well. So now you have the choice on both mortgage insurance and property tax. Now, if you were doing a refinance scenario, things change a little bit. With refinance deductibility, you're really only allowed to deduct the payoff that you had from your last refi. So if you are doing a cash out refi and you're using the proceeds for a renovation, you can actually write off the entire amount. So what we did is when you check the refi switch, you'll notice there's a new checkbox here asking, do you want to use the cash out for renovation? If you check this box, then it'll use the entire amount financed. If you do not, it'll actually use the payoff amount from your current mortgage that you were paying off. Now, another thing to keep in mind here, there's some logic in the background where we look at your current mortgage and the cutoff date is 12/16 of 2017 as to when the new tax laws went into effect. So any loan that was originated first payment date before that point is still under the old cap scheme. So it can still deduct up to $1 million of loan. Now, if you are refinancing a loan from before that period and you do a rate and term refinance, you can actually still get the same deduction. It's a grandfathered loan. So we built that logic into the system and it will do it for you. Now, the last part that I want to make sure you're aware of is second liens. Anytime you want to put a second lien inside of Mortgage Coach, simply toggle yes here at the end of any loan product, and it'll allow you to put in a second lien. And let's just put something in real quick here. You'll notice that at the very bottom of every second lien, there's now a checkbox as to whether to include this in the tax benefit. Now, this is particularly important because there are some situations where your second lien can be part of your tax benefit. Purchase money HELOC, for instance, renovation money, those can be part of the tax benefit. Most other cases, it won't be. So we leave this unchecked for you by default, but you can feel free to check it if your borrower does fall into one of those categories where they can deduct the second lien. Now, as far as the output, nothing's really changed in terms of what your borrowers are going to see. So if you're used to explaining the tax benefit where it's at, you'll see it in the summary section here. You'll also see it in the short-term area right here. So with that, let me pass it back to you, Dave. Any ideas you have for how we can make these presentations more meaningful, especially in today's tax environment for our borrowers?
Well, here's the deal, guys. I think the best loan officer is the one who is an expert, mortgage expert, and can demonstrate that they're a mortgage expert. So I'm not here to advocate that, hey, you need to be that loan officer that provides tax advice. In fact, I think it's an opportunity to get a CPA involved, a financial planner involved. But let's face it, you need to be able to answer questions based off of different loan options, what makes sense for the family. So all I know is you as a mortgage professional, if you become expert at this, if you're great at creating total cost analysis, you're exceptional explaining the options to family, you are going to have a competitive advantage with every family that you serve. Jacob, is there anything else you think we need to show them, or do you think we've kind of covered it so far?
I think that's pretty much it. There's going to be a lot of people who really love to nerd out on these kind of numbers, like me. Feel free to dive into it. Just understand that the output for your borrower, when they receive your total cost analysis, it's going to look exactly the same. We've just updated what happens to the numbers to prepare your tax benefit. So you can keep having the same conversations you had before. Just if you need any help on this, make sure to contact our support team, support@mortgagecoach.com, and also look for additional training resources that we'll publish around this specific topic.
So my last thought, you're watching this in our YouTube channel. We've shared this on Facebook, we've shared this on LinkedIn. If you create a total cost analysis and you helped a family make a better decision, let us know. Share a link below. If you have a question about this or how to get more training, ask a question below. Check out our calendar, check out our YouTube page, more to come. But let's keep the conversation going, and please share this with all of your mortgage friends so they become part of this Mortgage Coach movement of helping families make better decisions. Hey, Jacob, thanks very much. Look forward to seeing everybody's feedback.
All right. Thank you, Dave. Take care, Mortgage Coaches.